On January 24th, the SEC adopted rules to expand the investor protections in transactions involving SPACs, or special purpose acquisition companies. The SEC also adopted rules governing shell company business combinations and disclosure of projections in commission filings. To start, let's clarify what is a SPAC. A SPAC is a shell company that conducts an IPO without an existing operating business. After going public, the SPAC works to identify a private company to merge with or acquire in what is often called a de-SPAC transaction. This private company is known as the target company. At the end of the de-SPAC transaction, the private company becomes a public company and receives the SPAC's remaining IPO proceeds. So what are the new requirements for SPAC transactions? At the SPAC's IPO, there are expanded disclosure requirements. At the de-SPAC transaction, there are expanded disclosure and procedural requirements. These include disclosures about the target company, projections, any board determination on the advisability of the de-SPAC transaction, and certain outside reports received by the SPAC or SPAC sponsor. The release also explains the legal obligations of the target in a de-SPAC and provides guidance regarding underwriters in de-SPAC transactions. For all filings, including filings related to the de-SPAC transaction, the rules provide guidance on the use of projections. In addition, other notable changes include certain business combinations involving reporting shell companies are considered a sale of securities. The Commission believes the Section 389 exchange exemption is not available for this sale. The financial statement requirements for shell company business combinations are substantially aligned with those required in a traditional IPO. The Commission provided guidance on whether a SPAC may be an investment company under the Investment Company Act. Generally, companies will need to comply with these rules 125 days after the rules are published in the Federal Register. The inline XBRL tagging requirements, however, will not be effective until 1 year after that date. This video is intended to provide only a high-level summary of the new SPAC rules. As always, we encourage you to take a look at the fact sheet and the adopting release for more information.